Yo, I'm starting it right now. I'm starting it right now.
Face.
Yo, what's up, family? We're going to go ahead and get started in the next couple of minutes. Make sure, if you're a part of Powerhouse, go into the chats, let people know that we're live and we're active. If you're watching this just on here on YouTube, we'll sit back, take some notes because this is crypto and assets, and we're going to have a lot of amazing value to go through. The markets are giving good opportunities. And this is the time to actually be learning and be plugged in with the crypto and stocks and asset market as a whole, fam. Go ahead and share this, and we're going to start in the next couple minutes.
What's going on, family? What's going on? Hope you can see me, you can hear me. Super excited to be on this. What's going on, family? What's going on? Hope you can see me, you can hear me. Super excited to be. Amazing. So put a 10 in the chat. If you guys can see me and hear me, we are live on YouTube on the Powerhouse University. Just want to make sure that you guys can see me and hear me. So yeah, definitely put a 10 in the YouTube. I think we're all set. Yeah. Gil, feel free to let me know. Not on my phone, but just let me know maybe on the telephone.
There we go. You're good.
Brilliant. Okay, cool. Sounds good. So yes, crypto and assets. Welcome back every Saturday and at a new time, as you know, which is going to be 12 midday Central, 10 a.m. PST, 1 p.m. ET. We have a lot to talk about today. There's a few things that have been going on in the past week.
Recording in progress.
You know how we start these crypto and assets calls. It's always with what's going on, always with the fundamentals. And as the crypto market has been in a slightly bearish, shall we say, there's been a lot of fear in the market, but we want to bring some logical thinking, right, in terms of what is the best next step for you guys to do, what should you be monitoring, and how can you work with your portfolio and your leverage trade. So I'm going to go ahead and share my screen, and we're going to dive right into things. So let's have a look here. Cool. Let's see. All right. I think you guys should be able to see my screen. Let me know if you guys can see my screen here. Sweet. So as you can see, crypto and assets, and there's a couple of key things that I wanted to touch on, which is really, to begin with, Coinbase. Now, we know Coinbase is a centralized exchange. It's the most used exchange in the US, I believe. And so on this centralized exchange, you can buy, sell crypto, you can invest in crypto, and there's various sort of functions that you can do. You can even stake. And so in Q4, as you guys know, Q4 earnings and reports, they come out after that period of time. And it's what a lot of traders and investors look out for, because the news is going to affect the market, right? Like leading up to the Q4 announcements, if things are believed to be positive, then the market would be bullish. If things are perceived to be negative, then the markets will be bearish, right? They say that news is the excuse. And they also say that, news is the things that not necessarily moves the market, but it's the actual leading up to it that has an effect. And so in Q4, they saw a $667 million loss. Now, that's interesting because you guys know that we have shown in the past the Bitcoin monthly returns and how Q4 is normally a bullish period of time. But it was not this time around. And so that was something which a lot of people did not expect. And Coinbase is not only an exchange, but they're an investor of crypto. They also have a portfolio of crypto assets themselves. So that's why they saw a loss. And I want to show you guys this report because I truly believe in reading reports because you can learn a lot from them. And Decrypt, as you guys can see here, is one of the most non-biased, reasonable, platforms that you can kind of learn about these things. And so there was one or two things here that I found really, really interesting, right? So the first thing is this, and we talk about the retail mindset compared to the institutionalized mindset. We talk about how the big money, the smart money, the institutions, the hedge funds, the family offices, the VC funds, the people who move the market with their positions, their mindset towards investing is very, very different to the retail trader, to the retail investor, which is, us, right? Our $100,000, $10,000 is not going to physically move the market for Ethereum or Bitcoin and these other assets. But for their $100 million positions, $200 million positions, it definitely can do so. And so this is big money thinking. This is what they said. It's more of a buy and hold situation. We're not selling any of the portfolio from a profit recognition standpoint. It's just kind of our normal course of operations. Now, it seems like a simple statement from who I believe to be the Coinbase CEO. However, or I believe actually here it was the vice president of investor relations at Coinbase. However, it's something that we don't practice a lot. How many of us are willing to buy and hold an asset for the next 5 to 10 years without feeling an emotional reaction and selling when you really shouldn't sell yet in a downturn? And so this is genuinely how they operate. They're at a $600 million plus loss and they're still buying and holding. And that tells you something about investing from a non-emotional standpoint. There was another paragraph in here that I found really, really interesting, guys, and I want to share it with you. Let's have a look here. As we scroll down. Okay. Let me zoom out a little bit. Something here about USDC, which I found really interesting, and a revenue sharing agreement. Here it is. So this is something as well, which a lot of us may not know of how things work in a back end, but many of these exchanges, what they have is revenue sharing agreements or agreements with crypto companies to actually benefit from a revenue standpoint. So they have the crypto listed on their platform, but they're also benefiting when people are buying it and people are using that token or that project. And this is exactly what Coinbase have. So we all know USDC, it's a stable coin, and it's run by Circle, the company, which IPO'd last summer, which went public, right? It's a tradable stock. Now, Coinbase actually have an agreement with Circle that allows them to generate profit from USDC transactions. So the more revenue that USDC makes, the more revenue that Coinbase makes. And you can see this here, right? They disclosed a $364 million fourth quarter stablecoin revenue. How's that possible? Well, because Coinbase is earning income from their agreement with Circle within the stablecoin, USDC. So that's something which is interesting because it just shows you the kind of plays that institutional money has in the back end, but also it shows you the strength of USDC compared to USDT or other stable coins. That's the big key that I want you guys to keep in hand, because when the markets are volatile, you should, and even when the markets are bullish, by the way, you should always have some funds in stablecoin ready to deploy. So the next bit of news here, MicroStrategy sees a $4.5 billion unrealized Bitcoin loss. Now, MicroStrategy, who is that? What is that? You guys may have heard of it. MicroStrategy is ran by the CEO called Michael Saylor, and MicroStrategy are one of the largest global holders of Bitcoin. And it's a huge investment fund in which a lot of high net worth individuals and clients have put their money in this pot of MicroStrategy, and they're simply buying up Bitcoin. I think they have an average price of Bitcoin of like $74,000. So, they're at a slight loss, but, let me show you guys, I think it was Q4, $4.5 billion unrealized loss. Unrealized simply means that they haven't taken profit and they haven't sold, right? It's just, it's P&L, it's unrealized. And for you traders, you probably know what that is. And so this was an article that touched on it. And you're going to see why I'm speaking on these things, because I want you to understand big money versus small money. We're going to get to that in a moment. But as it says here, their average price of Bitcoin is $76,000. That's their average price. And if we scroll down, Where are we going to see it? Where are we going to see it? Approximately 90 million average price. Yeah, so this just emphasizes how much Bitcoin holders they have, guys. So as it says here, the acquisition brings the company's total Bitcoin holdings to 714,000 BTC. That's an absolutely astronomical amount. But as you may have heard from last year, even with Bitcoin in, significantly below all-time highs, they're still accumulating this as it's going down, right? And that's the concept of dollar cost averaging, DCA. We always speak about that. And so if the large companies are doing that, that's something which you want to consider as well. Now, the final point here was about Goldman Sachs. Now, we know Goldman Sachs is one of the largest investment banks in the world. You also have JP Morgan, you also have Citibank, all of these massive firms. And as you know, as we spoke about, they have typically been recommending now crypto investments for their high net worth clients. They're recommending to have 3 to 5% of their portfolio in crypto, which, by the way, just think about this. Often we hear about people saying 100% of your investment in crypto, 50% of your investment in crypto. But just to repeat, guys, like the largest banks in the world are suggesting 3 to 5%. So that's something to keep in mind. And so let me go to the Coinbase article over here, because this really breaks down the holdings that they have. They have Bitcoin, Ethereum, XRP, and Solana, and these are the ETFs. And they're doing it through exchange traded funds, which, as you know, is a basket of different goods, a basket of different investments piled into one stock that you can then invest in, allows you to be more diversified. And it kind of, you get a lower ROI, but you have higher diversification, which is less risk, basically, right? And it deals with volatility better. And so, so they have a lot, like large in terms of it's a lot of money. But actually, in their entire portfolio, Goldman Sachs only have 0.33% of their investments in crypto. So it's funny because sometimes you say we're late to the party. Sometimes you say, oh, crypto's already gone. Everybody's involved already. Well, hold on a minute. One of the largest investment banks in the world has 0.33% of their portfolio in crypto. Like, this is not gone. It's not too late. Because what happens when they go up to 1%, when they go up to 2%? Like, you guys see what I'm saying, right? They have 2.2 billion and it only accounts for 0.33%. And I think their assets under management, which is called AUM, is 1.7 trillion, 1.6 trillion, around that number. So such a small percent in the market yet, which means there's a long way to go. And I think that's important to re-emphasize that. So we've been having some conversations about our portfolios, right? What are we invested in? Are we in Litecoin? Are we in ICP? Are we in Chainlink? Are we in you name it, whatever the crypto is, XRP? And so, the conversation sparked some thoughts to my head. And it was, well, do we understand how the big money think and operate compared to the small money? I don't think we do. And these are the 5 biggest keys that I want you to take away from my section of the call here. Number 1, big money hold positions in downturns. They hold. Small money sell positions in downturns. This is a basic fundamental principle, guys. And by the way, I've made this mistake before too. Like, I have, especially in the first cycle, guys, I over leveraged in the crypto market and unfortunately had to sell some assets when things were at a loss. Like, I wasn't even at break even yet because I needed the cash flow liquidity to live life, right? Like, to pay for expenses, to travel, whatever it is. And so these mistakes happen, but it's important that when big money's in the market, guys, when they put a $10 million, $50 million position, they do not need the cash. They keep that there and they can hold it. But what does small money do? We get scared when we see 50% down, 40% down. We start having uncertainty. We start losing all the education that we've had for the years watching the live platform. And then we want to sell because we're frightened. So we really have to understand that. Number 2, DCA, even when price rises. That's what big money does. Small money, they never DCA or only DCA in downturns. What does that mean? Dollar cost average. That means investing in an asset as it's going down. Well, big money does it even when it's going up. Do you guys realize that? MicroStrategy have an average price of Bitcoin of $74,000. And they have over 700,000 Bitcoin tokens. Guess what? When price was at $100,000, you know what MicroStrategy was doing? One of the largest institutional investors in Bitcoin, they were buying more Bitcoin. Buying more. But what was small money doing, guys? Let's be honest. They were selling their Bitcoin, or they were saying, nope, I'm not going to dollar cost average because I got in really low. So I'm not going to reinvest. But you see the difference here. Number three, the majority of their portfolios in main caps, the majority of small money's portfolios in mid to small caps, right? We spoke about this being in a conservative, a moderate, or an aggressive investor. Three different types of investors. Conservative investors have most of their money in large caps. That's how the big money moves. Aggressive investors have most of their money in small to mid caps. That's how typically small money moves. So I want you to understand that just how important it is to have a good chunk of your portfolio in the Solana, the Ethereum, and the Bitcoins. Simple. Solana, Ethereum, Bitcoins. And let me touch on one of the reasons why, guys. So the obvious reason is they're larger cryptos, they're less volatile, and there's more trust. True. There's more utility. True. But there's another reason. When Black Swan event happens, which is a unprecedented, unanticipated, unpredictable, one-off economic occurrence, which just blows the market away completely, right? For example, FTX collapse in 2022, or for example, COVID, or the Terra Luna crash, right? All of these things that happen. Well, when those events happen, it's the small caps, especially, that really struggle. And the large caps, they have slightly less of an impact. And the reason why is because there's staking with these large cap cryptos. And staking is a function, as you know, which allows you to earn interest on your crypto projects, on your crypto investments in the form of tokens. Now, did you know that Ethereum, which is the second largest crypto, when it comes to staking, Ethereum has 30% of its supply in staking. What does that mean? That means that 30% of it is effectively locked up, which basically means it's harder to get that liquidity out and it takes longer. So if a massive event happens, a one-off occurrence event happens, well, 30% of Ethereum volume takes time or is more difficult to get the liquidity out and then for people to sell it and put it into another project or to withdraw it into fiat or cash. With Solana, I learned this fact today. 60% of Solana is locked up in staking. 60%, guys. It's about 60 to 66%. That's a huge percentage. That means that the probabilities of Solana going to zero or just going to like $2 out of the blue is exceptionally low because 60 to 66% of it is staked, which means that the holders would have to unstake it, and sometimes there's a lockup period or what's known as a cooling period before they even can bring that project, that tokens into liquidity so they can freely move it around. That's one of the main reasons why we like to have our portfolio in main caps. Put a 10 in the chat if this is making sense. I hope this is making sense to you guys because these are the technicalities behind why we say certain things, not just because we say certain things. It's backed up by data and actual like statistical evidence, which is important. Number 4, big money plans to keep investments for 30 to 40 years. Patrick Kenny is one of my favorite educators on the platform, guys. The man's not even 30 years old, and he has incredible knowledge and wisdom when it comes to long-term investing. He's an options trader, but he's also massive into stocks, investing, index funds, ETFs, things like that. And one thing he teaches is, guys, you need to have a mindset of holding these investments for 30 to 40 years. Literally at the Zinrai Powerhouse event in Dallas, where we had 150 people come in person, guys, Patrick Henry said this on stage. He literally said, you guys are thinking about investments for 1 or 2 years, maybe 3 years, maybe 5 years. No, 30, 40 years. Because you know what these massive banks do? They think about investments even for when they're dead. They think about it for the next CEO or the next CEO's CEO. Like, that's how long they actually, like, I don't know if you guys know this, but wealthy families, they don't think within their current lifetime. That's how big their dream is. You know how wild that is? Like, all of the guys, like Trump, Walt Disney, Andrew Carnegie, Napoleon Hill, Henry Ford, guys, all of these absolute tycoons and moguls that we've heard of today, they are, like, many of them are long dead, but their surname remains today. Why? Because when they were living, what were they thinking? They were thinking, how can I maintain wealth? How can I maintain my family name 2 generations long? That's how investors think. That's how large investment banks think. You know why? Because it's the same C-suite, CEO, CTO, CFO. It's literally within the bloodline from cousins to cousins' daughters to sons. Like that's how they work. So the bigger time frame that we can have with this mindset past your even current lifetime, honestly, the more successful things would be, not just for you, but for your legacy. It's a hard concept to understand. It sounds kind of esoteric and wild, but it's really true. Number 5, track and record data of investments. That's what big money does. They actually track their investments, meaning they know when they got an XRP, they know the price, they know the date, they have it all tracked and behind, and like everything is data orientated. But small money doesn't do that, guys. Small money makes an investment off the cuff today at 12:30 p.m. Central, and they don't even record it. And then 6 months from now, they don't even know when their 1 to 3 return is. They don't even know when they've made 200% of their money. They don't even know where their money is. Is it in Kraken, Coinbase, Binance, Ledger, Trezor? Like they have no idea. They don't know where they're staking their projects, and they don't know where they're holding it. Is it in do they have NFTs on OpenSea or Magic Eden? Do they have MetaMask investments? Do they have investments on Jupiter? This is how small money works. And you guys know what I'm saying, because some of you may be in this position, which is why we want to change that. So you actually have a spreadsheet and you're tracking this information, because what you don't track, you can't measure. And what you can't measure, which means you're basically like a headless chicken, right? Like you're making investments, you don't even know what's going on. So these are the 5 keys, guys. Take a screenshot. I recommend you keep this close to you and you understand it. I hope you learned something from my part of the section. I'm going to pass it over to my man, Gil. You guys already know him, but it's good to reintroduce. Gil's somebody who's been in the market for 5+ years. You know what I mean? He's literally one of the most disciplined investors that I know, 100%. And he is, it's pretty fair to say now, I'm going to say he's a master at breaking down investment concepts. And honestly, being a good investor, which means tracking information, which means knowing their take profits, which means DCAing, right? And so his mindset towards the market of 5 years of experience is something you really, really should pay attention to. Gil, my brother, I'm going to pass it over to you.
Of course, of course. Nah, appreciate you, bro, for being on today's session with us. Being here, giving a lot of game. I don't know about y'all, but there's a lot of game that Jean-Luc literally is broken down, and I really like the topic of big money and small money. Like put a 5 in the chat here on YouTube. I know we have a little lag, but if that was a very good topic to go over. I really like that topic when it comes to smart money, small money, and big money. At the end of the day, just being frank, we are, retail money regardless. But just because you're retail money, it does not mean
recording stopped.
It does not mean that you have to be thinking like retail money, right? That's one thing I've realized in this journey is, shout out to, the Trade House squad. Shout out to all the educators that we've been able to learn from for so many years. And they taught us on how to dissect the way that institutions, big players actually play, because even though we're not moving with that money yet, right? We are able to have the same kind of perspective, or find out that perspective, or learn from that perspective, to be able to be in the similar opportunities that these institutions and big players are at, and big money is really at. And that's where really, if you guys didn't know, that's where smart money comes from. Smart money is coming from the understanding of how big money moves their money. Okay, so that's why I'm really happy that we had Jean-Luc break that down for every single one of you guys. Now, for myself on this, and also just to let you guys know, Jean-Luc is somebody that I really appreciate. And the reason why we decided to partner in doing these calls, and I know we had little gaps. We just had an amazing conference out in Dallas. If you were there and you got some value, put a 7 in the chat if you were at the conference in Dallas. If I was able to meet you in person for the first time, well, I'm really happy I was able to. If you weren't there, there's a lot more exciting things to come, but we had a little gap. Now we're back with crypto and assets. I'm just letting y'all know it's something that obviously we have here on YouTube, but we have everybody for the community with Powerhouse as well. All right. From here on out, these sessions are going to be really good. They're always been good. To do is having more sessions on certain topics. So when it to maybe supply and demand, right? Like more concepts that you guys can learn and add to already what you're learning within Zenrai, within as a whole. Okay. So what I'm going to be talking on, it's not going to be very long because I wanted to give you guys a good basis of where we're at now. So my segment on here is going to be more on the charts. Okay. And what I want to show you guys, all right, I don't know if you guys have been seeing, but crypto, specifically Bitcoin and Ethereum, are at red for the month. And at this point, I think it's every crypto. Now, there's a couple things I want to talk about on today, and I'm not going to go too in depth. There might be a session that I'll do with John Luke that'll be more in depth about this concept. But I want you guys, if you guys taking down notes, to write this down. Okay. And this is something, shout out to Zachary Hogan, because I've learned from him a lot with this. And one thing I've learned is this: the markets change over time. I'm going to say it again. The markets change, they mature, they advance, they become either more complex, more volatility over time. And this is why I'm gonna hit on this very crucially. This is why it's important to always have continual education, to always be learning from maybe somebody that's more experienced, to always be diving into a little bit more education. And, not meaning you have to change your strategy or change your perspective or change your analysis, but it's more just understanding that the market is going to change. And I know us as people, we do not like change, but change is needed. Okay. The same way the stock market moved back in the 19 whatevers when it started is not the same way it moves now. The same way gold was moving in 2018, 2017, 2016, it's not how it's moving now. Because remember, things advance. As long as technology is advancing, in my opinion, the markets will be advancing. All right. Hopefully that makes sense to y'all. But the reason why I'm bringing this up is because, in my opinion, we are in a new era in crypto. Now, I want to ask you guys this, and I know we have the chat, and I know it's a little lagging, but it's fine. But I want to ask you guys, put a yes in the chat if you have learned about the bull cycle, the bear cycle, right? Bullish market, bearish market every 4 years. Put a yes in the chat if you have learned that before. You know that concept. Every 4 years happening, we have the bull cycle, we have the bear cycle. We got the bull cycle, we got the bear cycle. So put a yes in the chat if you've learned that. Put a no in the chat if you've never learned that. Maybe you're newer and you've never heard of that before. But majority of people in crypto have heard that. Okay. If you don't know that, that's something that's been talked about. But I want to let y'all know, in my opinion, that is dead. That is dead. That 4 year bull bear cycle is dead. What I see crypto is going into, and again, I might have another segment about this that I've been learning with the education, right? That's why I'm always educating myself, is the fact that crypto has more institutional money, which means that it's more likely going to start moving more like the stock market than it does with the crypto markets, right? Which means that the same cycles that we've been having probably won't be the same cycles that we're going to be having from here on out. We are in a different ball game. And as you guys can see, even just looking at this, right? You have Ethereum. If this quarter closes negative, this will be the first time since 2016 or before. We don't have before, but from 2016 for 10 years that there's been 2 quarter ones red. Now, do I think this will be red? Honestly, I think so. I think it will. And I'll talk about that here in a little bit, right? So that for itself shows a lot, right? With Bitcoin, it's shown that. Obviously, this is not the only reason why it's happening, and this is not the only data or backing I have. But one thing I want to see is this, okay? Now, if you guys haven't been in the crypto markets for a while, one thing that will always be in the markets is the emotion behind it, okay? There's something called the Wall Street cheat sheet. I'm not going to show it because of, internet, and I don't want to get frozen here. But there's something called the Wall Street cheat sheet. This Wall Street cheat sheet talks about the emotions in the markets, which are these, okay? This was first created for the stock market. But as we know, every market has emotion because every market has people, and people are emotional, right? And now that institutions are in play, institutions want to take advantage of people's emotions, right? So the reason why I'm showing is this. In the last bull run, we saw all these emotions. And I have this labeled for a reason. We saw the disbelief. We saw the hope. We saw the optimism, we saw the belief, we saw the thrill, we saw the euphoria. Then we also saw the complacency, the anxiety, the denial, the anger, the panic, the depression, and again, the disbelief. And then cycle again. In this new cycle, fam, just to let y'all know, BTC is the only crypto that actually broke above all-time highs. Okay. So what I see is this, even though it's been like a 4 years since, 2020 was the last, or 2022 was basically, well, actually, yeah, like this time was where like the happening was around this time, 2024, around there. Right. So what does that mean? That means that Bitcoin made its move, but the altcoins didn't. And that's something that everybody's been waiting for. When are the altcoins going to move? When is this going to happen? And even myself, this is new. And I think for anybody in crypto, I don't think anybody in crypto right now can say they know exactly what's been going on and they know exactly what's coming. I don't think so, because it's never happened. But one thing that we can see, one thing that we can quote unquote rely on is market structure and emotions. And right now, I don't know about you guys, but there's a lot of fear in the market. Put fear in the market, put fear in the chat for me. Put the word fear in the chat if you've been seeing a lot of fear in the markets. Right now, we are probably at one of the lowest that I've seen in a very long time. On February 11th, fam, we were at 5. This is an indicator. This is like an index of fear and greed. So it's not really like, just something to kind of dictate. It's very popular, but it shows the fear and the greed. When there's fear in the market, most of the time the market is low, right? When there's euphoria, right? When it's green, people are excited. Okay. And one thing I've learned is this: when people are when people have fear, you want to be greedy. When people are euphoric or excited, that you want to be fearful, right? That's something that Warren Buffett says. Okay. And he's one of the top investors. But you know what's interesting to me? This is what I'm going to bring up. This is kind of my biggest part of today's call. Why is it that we have the most fear right now? Why is it that on this is the only indicator that I use outside of volume, right? There's something called RSI, and it's not that important, but I like to use it on the bigger time frames because it shows supply and demand. And why is it that at the same time that we were down here in 2022, okay, don't miss this, we were here, meaning very low on the RSI. And today we are here and we're at the same zone we were here. What does that mean? To me, I'm not saying the bottom is in. I'm not saying that. But what I'm saying is this: I actually like this. I love it that at this moment is not even that much of a retracement, fam. Like, if you look at the whole move, like we're only down 47, 48, 50%. Bitcoin traditionally is known to go down 75, 80%. So that's what I'm saying, that the market has evolved. And I personally believe that this is the retracement that is before the next move. And now I also think that the altcoins have their own market now. It's not the same Bitcoin that moves Ethereum. Shout out to Zachary Hogan. He's on our platform on Zenrai. He talked about it on one of his sessions. He said, I don't believe that it's going to be the same old anymore, where Bitcoin has to move for altcoins have to move. Because remember, retail has not entered the market yet. Institutions have. So what if this whole time we actually haven't had retail get into the market? We just had institutions. And what did they get into? Bitcoin. But what's next could be the altcoin season. And I'm letting y'all know this. I'm not saying it's going to happen. I'm just letting y'all know my perspective. This could happen without Bitcoin creating all-time highs. So this is a little different, okay? I'm just coming on here and giving you guys, like a couple of different perspectives, right, to look at, that I'm just researching. I'm learning from our educators, from people that I've seen over the years, and also with the experience that I had, is that things are evolving. So one thing I'm letting you guys know this is that I personally really like Bitcoin in this area. I love that the fact that it's super low on the RSI. I only use this on the weekly and the monthly time frame. So I really like this. Now, what I want to also let y'all know that I don't think it's just going to be an automatic bounce. Okay. Bitcoin is not just going to go from here crazy, right? It's going to create something called consolidation. And that's what we want to see. We want to see Bitcoin create something like this, right? Create some sort of accumulation over time. And I could see, I don't know, I'm just giving you my perspective. I could see altcoins moving. Oops. I can see altcoins moving during this time. So what does that mean for things like Ethereum? What does that mean for things like Solana? What does that mean for things like Chainlink? Okay. I believe and I really like these areas, right? Chainlink really came into this area that I've been talking about this area for so long under $8. Max Otero has been talking about this area for so long under $8. If you're not on Zenrai Ideas app, it's already was called out in that area. I really like these areas, and I'm not saying it's going to go lower, but we are already at a very low point in altcoins. So I personally believe that there is some really good altcoin opportunities, bigger tokens, okay? Things like Chainlink, things like Solana, things like Aave, right? That made moves. Don't get me wrong. These made moves. Look at this. Aave went from 53 to around 400. But the bigger move, I believe, is what's coming next. All right. Now, do I think it's going to happen as, we all thought? Maybe not. But I also been talking about how the economy is having a lot of bullish things being pumped into the economy, potential stimulus checks, things like the World Cup, all these movies coming out. So there's a lot of incentive for money to go into these markets. So my best piece of advice, and this is what I'm saying, is this. Start with either adding to your portfolio. If you don't have a portfolio, with your portfolio, start with the main cap tokens. Okay. Start with things like Bitcoin. If you do not have Bitcoin, it's something I don't always talk about because Bitcoin, I know the opportunity of it is not as crazy, but even in areas that we're looking at now, right? If you do not have Bitcoin, this could be, I'm not saying it's going to happen because we could see this and then down. It could happen. But this could be maybe the lowest points that we see in Bitcoin, either forever or a very long time. So this is the time I personally believe that the main cap tokens have the best opportunity because it's already looking at potential bottoms. So Bitcoin, Ethereum, okay? Ethereum under $2,000, Steel, Solana already broke below these lows under $100, right? Those are, Litecoin, even Litecoin, to be honest, Litecoin being around like $50, right? These are ones that have been here for a very long time. And then you can start diversifying into the other ones. But just to let you guys know this, if you guys want to look into tokens like Ondo, like ICP, like Filecoin, right? These are not bad tokens. These are good tokens. They have great use case. They have great things. I have them myself. But one thing I want to see for these smaller cap coins, guys, is just be patient with structure. Be patient with something like this. It's like everything in life, right? When you're scalping the market, you might want to have a couple more confirmations, right? When you're more of a swing trader, then you have a little bit more of like playing area. That's how I see Bitcoin, Ethereum. You have a little bit more playing area because even if it's not the bottom, you could maybe go down 15, 20%. But if ICP decides to continue to go down, you're going to get a 50% hit, 40% hit, 60% hit, right? So just be patient because I personally believe right now the time is to look at the bigger cryptos, potentially accumulate, be patient as well. It's something that you want to look for structure, and we'll have another session about it. But we want to start to see structure hit and maintain, right? You want to see Ethereum do this, right? That's what you want to see. It's called accumulation. Wyckoff schematics. We talk about it. The educators talk about it. If you haven't studied it, I think Valentino has a really good session on that actually for trading, but you can use that for investing. You can use that, just higher time frame. Same thing with Bitcoin. I want to see this, right? This can give us more time, but I'm giving you guys my piece of advice. I would rather be patient than to be rushed. Okay, yes, when opportunities happen, you don't want to wait too long. You don't want to procrastinate it, but you also don't want to rush into an investment and like pour your whole like full port, right? I know we talk about full port a lot. You don't want to full port in something like an investment. Mike Sotero talks about it. If you want to enter in something like Bitcoin or something like Ethereum, okay, now that's fine. There's nothing wrong with that. But just keep in mind, you don't want to buy on green days. You want to buy on red days. So today is a green day, maybe not a good day, right? But when we see a red day, maybe you buy some, but you don't full port your investment, because if it comes a little bit lower, then you buy some more. Then when maybe it comes even lower and you're like, okay, now I want to be a little bit more patient or buy some more. And as soon as you start to see structure play out, that's when you start to execute into your portfolio. Because my best piece of advice for the last 5 years, I've seen the markets. I would rather not catch the bottom and like not be like at a point where I rush into my investment and then I had to wait six months to a year. Like, hopefully this is making sense. I know I'm kind of like talking about a lot of things, but today I'm just giving you guys my mind where things are at with my experience, is mostly because most of us here are traders. I highly recommend to mark up the chart like a trader and execute as a trader on the higher time frame, right? Wait for that confirmation. A little bit of a difference in price, guys, is not going to kill you. But you know what might kill you? And mostly if it's your first market cycle, which technically there is no cycle, so it's your first time investing in crypto. What might kill you is being 50% down. What might kill you, and I'm not saying that's a bad thing because you can't be attached to it, right? But that might kill you. So I recommend, if you're newer in this space, if you're experienced, do your own thing. Don't listen to me. If you're newer in this space, apply what you're learning from trading. Look for market structure. Look for the break of structure, the higher highs, the higher lows. And that's going to give you the confidence to say, yeah, I know what I'm doing. And that's the blessing we have here within Powerhouse specifically, that we are traders and we're investors. Okay, fam. So I don't want to take too much of your time. I don't want to make this session too crazy. But put a 5 in the chat if you guys got some sort of value today. Again, there's a lot of things that me and Joe Luca are going to be coming together and doing. We're actually going to take probably Monday, because it's a holiday, to sit down and plan the next 30, 60, 90 days for crypto and assets. But I want to let y'all know this. This is the best time to be educated in the markets. This is the best time to be an investor. These are where the opportunities are. These are the moments that you look back to and say, dang, I'm grateful that I was educated because now I took advantage of it. Most people wait for the tops to get educated. But you guys, the ones on here live or you're watching this recording, you guys are the ones that in the next 3, 4, 5, 10, 15, 20 years are going to look back and say, wow, I was before time. Like, I actually had the opportunity and I took advantage of it. All right, fam. So with saying that, I appreciate you guys for being on today's call. Today's live stream, I guess we're gonna call it. But again, I'm excited for everything to come. If you're a part of Zinra, you're a part of Powerhouse, guys. Stay plugged in with the education. Stay plugged in with Max Chatero. Stay plugged in with the midweek huddle with Patrick Kenny. Stay plugged in with Zachary Hogan. He's on the charts for crypto every single day when he's on, right? Stay plugged in with the education. ask questions. If you want anything from us, you want a feedback, perspective, portfolio audits, whatever it is, just reach out to myself and John Luke, with Tony, Fernando. We have so many people. And just know, guys, the best, quote me, the best is yet to come. I'll see you guys next Saturday. Peace.